All right. Welcome to Coffee with Marcus and Mark, the #1 stock market show on Spotify and one of the most popular market updates on YouTube. In this show, we talk about what's happening in the markets and how we are trading them. Today is Friday, July 12th. What a week. The S&P hammered yesterday while the Russell soars. That was a bit odd. Should we start paying attention to the S&P 493? PPI numbers confirm an inflation surprise. Banks kick off earnings season. Jamie Dimon has some inflation comments to share. Tesla, it gets downgraded after delaying its robotaxi event. Plus, I sold calls on Halliburton. We had a new WTF signal and 4 exit signals. And what does Bill Nye the Science Guy have to do with a shoe company? You'll find out at the end of the video. As you can see, there's a lot to talk about, so let's go ahead and get started. My name is Mark Hodge. I'm head coach at Rockwell Trading. And let's go ahead and see what's happening in these crazy markets today. Let me go ahead and share my screen. And again, for today's video, it's just me, Marcus. Hopefully we'll be back on Monday. He's feeling a little bit better, but he's been out sick this week. And looking forward to have him join me back here on Monday. Hopefully, that's the goal. Speaking of goals, it looks like the S&P has a goal to get back up above 5,600 today. What a rebound after yesterday's drop. Now, yesterday we talked about this. We had CPI data that came out better than expected, showing that inflation was calming down and actually getting better. And the S&P actually dropped, was down 0.9% at the end of the day. If we look at the NASDAQ yesterday, the NASDAQ down almost 2% yesterday, which was a bit of a surprise because looking at the overall market, there were a lot of stocks in the green. In fact, if you take out the Magnificent Seven, we could go to PowerX Optimizer and we could look at the heat map here, see what's going on today. Yesterday, there was red in the biggest companies, right? So there was a lot of green in the rest of the S&P 500. You exclude the Magnificent Seven, and there was a lot of green except for those 7. That's why I was saying, should we pay attention to the S&P 493? Because it looks like there was a bit of a rotation out of some of these bigger names yesterday. And this actually became super clear when we looked at the Russell 2000. We could pull up IWM as the ETF that represents and tracks the Russell 2000. Look what happened yesterday. The Russell 2000 IWM was up 3.6%, while the S&P was down 0.9%. In fact, it was just the second time since 1979 that the Russell 2000 was up 3% and the S&P was negative. This, according to Bespoke Investment Group. And look at this, even today, Russell soaring again, up 1.7%. So these small caps, a lot of money going in yesterday with the NASDAQ 100 and the S&P 100 down. Interesting situation and move. You don't see that every day. And today it does look like it's a broad market rally. So there's green across the board. If we look at the big names, NVIDIA is up 2.7%, bouncing back. Apple up 1.9%. Microsoft flat right now. Google up 0.2%, so up just a little bit. Meta down 1.2%. Amazon flat for the session. Tesla up 3.9%, so a pretty decent move with Tesla. In fact, we could take a closer look at what's going on with Tesla, because Tesla had a downgrade today, and yesterday was one of the stocks that fell the most, down 8.4% yesterday. And Tesla had a downgrade after it delayed its robotaxi event. So the robotaxi event, I think I saw that it was delayed from October to April. So a lot of hype and excitement about the robotaxi. And I believe it was USB that decided to downgrade Tesla because of it. Here we see that they're event was delayed to October from August. I might have misread this, or maybe there was an update. If this is correct, I thought it went from October to April, but right here it says October from August. So that might be more accurate. Either way, bottom line, there was a downgrade, and Tesla gapped down this morning, but bouncing back nicely. And right now we see that Tesla's up 2.6%. And again, when we look at the broad market, the S&P 500, pretty much everything's green, right? JP Morgan did report earnings. We could take a look at JP Morgan. So banks kicking off earnings season, and JP Morgan opening lower, now just down 1%. And this is where JP Morgan actually reported better than expected earnings. They had an earnings beat. They also had a revenue beat. So top and bottom numbers, top and bottom, being better than expected here, which the stock opened lower by about 2% in spite of this better than expected report. Maybe a little bit of profit taking. Now, Jamie Dimon, he did have a thing or two to say about inflation. He said that there has been some progress bringing inflation down, but there are still multiple inflationary forces in front of us. Large fiscal deficits, infrastructure needs, restructuring of trade, and remilitarization of the world. He also added, quote, therefore, inflation and interest rates may stay higher than the market expects. So we'll have to see, but it's worth taking a look at the CME FedWatch tool here. And if we look at probabilities, we see that 93% chance that the rates will remain the same at the end of the month with the July meeting, but September, real high probability that we will have a cut based on Fed funds futures, 88% chance that there will be a quarter point cut, 6.3% chance a half point cut. I don't know about that one. And a 5.6% chance that rates will stay the same, at least based on Fed funds futures. And then looking at November, it's still a bit of a toss up here, although that the Fed funds futures are pointing to the potential or slightly higher probability that there is a cut here. If there isn't a cut in November, it does look like December is the meeting that traders are betting on a second cut. We'll have to see if this actually remains true and stays highly probable based on the probabilities when we have more data available. But so far, that's what traders are saying, in spite of some interesting data coming out this morning. So if we look at the economic calendar and we see PPI data, a little interesting compared to what we had yesterday with CPI data. So yesterday's core CPI came in up 0.1%. So a 0.1% increase in that core CPI number, but this was lower than expected. And then the CPI data was actually a shocker, falling 0.1%, where a 0.1% increase was expected. And that put year over year CPI data at a 3% increase, which was better than the 3.1 increase forecast. Now, when we look at the producer price index, core PPI actually came in higher at 0.4 versus a 0.2% increase that was expected. And PPI data came out at 0.2% higher versus a 0.1% increase. And if we take a look at futures here, just to see the reaction while markets were closed, but futures were trading, we could see that traders didn't quite know what to make of this report. This big move here, a quick reaction to that PPI data, falling about, I think it was 0.35%, and then quickly snapping back. So there was this crazy move and then quickly snapping back. We opened a little bit higher and we took off from there. So traders definitely shaking off the report, and now the S&P's back above 5,600. And if we go to a daily chart here and we look at where we're at, we're above the record close that we had on Wednesday. So traders, after this quick drop that was mostly driven by a rotation out of the biggest names yesterday, the market's bouncing back, looking to finish the week strong. So what a move, and what's a what an interesting dynamic that we saw yesterday with the small caps just soaring and the S&P 500 falling like a rock, but really due to the biggest names in the S&P 500 and those magnificent seven. We could take a look at the yields right now. Not a lot of movement today, but falling after yesterday's decline. The 10-year yield fell 1.7%. There's a little continuation there. So not a huge fall, which sometimes you would see if the markets are up so strong. But again, it seems to be just some interesting dynamics between that rotation out of the big names yesterday contributing to that drop and the reaction to CPI data yesterday, but then no real reaction today when we look at those yields. However, the 2-year yield falling more than the 10-year yield, and this is where could we see that normal yield curve taking place? We've had an inverted yield curve where the 2-year yield's been higher than the 10-year for a while now, and maybe that's something that we will see change relatively soon. This is typically an indicator that traders have used as a recession indicator, but definitely some interesting things going on with inflation that kind of led to that as well. So anyway, going back to earnings, gosh, let's look at the earnings calendar here. And if we look at today's earnings, JP Morgan, we talked about that, Wells Fargo and Citigroup. Now, Wells Fargo, we could take a look at Wells Fargo. We talked about JP Morgan, that is. Wells Fargo getting hammered down actually down 7% here, even though they reported better than expected earnings and better than expected revenue. The real drop here comes from the net interest income that Wells Fargo reported. So this is a key measure of profitability for banks, and it fell short of expectations in the second quarter, but they also shared a forecast for the remainder of the year, and that full year they expect a decline that's 7 to 9%. So that being a bit of a weakness in the report, and maybe a little bit of a concern for investors, and Wells Fargo getting right down to this support level here. And in fact, we could take a look at the wheel here, see what Wells Fargo looks like on the wheel side. And Wells Fargo, okay, so kind of getting through that support level. Now that the reaction is out, there's some decent premium here with 59% annualized, but not a whole lot of movement. Look at how close we are with the 56 strike to where the stock's currently trading at. I would normally want to see just a little more of a cushion, be able to sell an out of the money put there. And now that reaction has taken place, it seems like traders are saying, okay, we don't expect Wells Fargo to move a whole lot, and kind of the news is out, right? The move has already been absorbed by the market, so to speak, and options prices. All right. Well, I'm curious, with earnings season and this official kickoff, how do you think this earnings season is going to go? And please share in the comments. I'm curious what you think. And to me, it's more importantly, how will the S&P 500 react, right? I mean, that ultimately is all that matters. If earnings are worse or earnings are better, or earnings are worse than the worst forecast or the decline that was expected, or just better altogether, does it really matter? Or does it really matter how the market moves? I want to know how the market will move, and I'm curious what you think. Do you think the S&P is going to be higher at the end of the quarter, lower at the end of the quarter, or just flat? So will we make new records because of earnings, or will we get a bit of a sell-off? Let me know. Post in the comments below. And if you'd like to know about the WTF trades that we took and got out of today, give the video a like, give it a thumbs up. Okay, let's look. WTF Analyzer. A new signal today, Airbnb. So Airbnb popped up as a valid signal. And there was this warning here. If you have the software, it says the symbol has been trading for less than 5 years. Therefore, we only have limited data and we recommend not to trade it. Well, ultimately, it's up to you if you want to trade it or not. And to show a comparison here, so here, Airbnb has actually been trading for a while. We don't have a full 5 years of data from when it IPO'd, so that's why we get this warning. But if we look at something that IPO'd just at the end of the previous year, like RR, you see here that there really aren't many signals at all. And so if we're making a decision based on the performance of past signals, this isn't enough data to really have a valid opinion on, right? So that's what this warning is for. Of course, this is a cheap stock and it's not the S&P 100 and NASDAQ 100. But that's why it popped up for Airbnb. We just have this look back period that we're after. And if we don't have the data to have that full data set for that period, then we get this warning. But Airbnb, there were a bunch of signals that have been identified, and we were comfortable taking this trade since it was in the indices that we like to trade, the S&P 100 and NASDAQ 100. So both Marcus and I bought shares of Airbnb. It opened at 146.83. We'll see where it goes. Now, we had a bunch of signals recently, and with today and yesterday, we cleared out most of those trades that we were in. KDP, this was one that I was watching. I was so close to taking it yesterday at the open. I did not, and there was an exit signal for today's open. So signal to close this one, and that exit signal 32.37 was the open. Moderna was a trade that I did take. Marcus did not. And Moderna actually worked out real nice for me. The entry signal was at 121.90, and today we opened at 123.68. So a little bit of profit on that original signal. But I also picked up more shares. I did an ad here. I picked up shares at 116.12. So with those shares, I had a real nice profit and getting out around 123.68. That means that there's a $7.50 profit on that second batch of shares there, and I was happy to get out for a nice win with Moderna. So I'm no longer in Moderna. PCAR was another exit signal. Now this one was a bit of a scratch because here we had an entry around 103.81, and today we opened at 103.62. So not too exciting there. Take Two Interactive, though, was a recent signal entry at 151.84. Today, 151.89. So another scratch. So for me, with the three that I traded, Moderna was a real nice win. PCAR and Take Two Interactive, basically flat with those two. But now I have some new open positions that I want to be in. I'm still in Disney, and I've added Airbnb, and we'll see if there are new opportunities. So that's what's going on with the WTF strategy and the signals that Marcus and I have traded. We could take a quick peek at our wheel trade, CSIQ. Oh gosh, there was some real nice follow through to yesterday's move early today, getting as high as 1784, but right now trading right around where we ended up yesterday. What a move, though. Yesterday we finished higher, almost 8% higher, and just making a nice run. So looking forward to seeing this continue. Nothing to do right now, but the shares we picked up at 1550, now it looks like it was a pretty good ad. So looking for this to make its journey on up, helped out by lower yields, hopefully. And we'll see where this goes. Halliburton. So yesterday I decided to sell 34.50 calls on half of my position. I collected 30 cents, so I got 35% annualized on those calls. I still have half of my position that's uncovered and looking to sell calls at a higher price if Halliburton continues to work its way higher. Now, today, Halliburton opened up higher, and there was even more premium available. 35 to 45 cents seemed to be kind of the range that we had early on in the trading session. Not quite sure where it's at right now, but some really nice premium for anybody that waited, especially if you were assigned somewhere between 33.50 and 34.50. I know one trader got 35 cents at 30 cents, I think, at the 35 strike, so was able to even go higher on the strike price there. Halliburton looking decent after pulling back, finding some support early on this week. UPS also looking decent. Again, following my magic arrow, the technical charting addition that you might not be familiar with, but working out great. Breaking to the upside, getting above this range, which I really love, because we've really been trading in this range between 134, 140-ish. Right now we're above. I'm hoping we could close above that 140 mark and just march on higher. Loving this move, looking good. Yesterday up 1.9%, today up 1.6%, and that looks pretty good to me. No other wheel opportunities right now, and we'll see what next week brings. Now, I know that I have been slacking on my dad jokes, and I apologize. And I know that some of you come for the trading, leave for the joke. Wait, that might not sound as good as I meant it to sound. But anyway, I have one for you. And I brought it up actually at the beginning of the video, if you recall. But anyway, how does Bill Nye, the science guy, open his front door? With Nikes, of course. There you go. Whether you like the joke or not, please give the video a thumbs up. If you're new to the channel, please subscribe. And if you know someone who could benefit, not just from the jokes there to lighten up their day, but with the commentary, looking at opportunities, discussing what's going on in the markets and how we're trading them, please share this video so they can check it out and subscribe. Until tomorrow, which trading-wise is actually 3 days from now on Monday. We'll be back here on Monday, hopefully with Marcus. Hopefully he's feeling better. Until then, happy trading, everybody. We'll see you then.